Boardroom battles expected to ramp up in the new year as more activists go on the attack. So says our Leslie Picker here at Post 9 following that money, as always. What'd you find out?
Hey, Scott. So here's a wild stat provided exclusively to us from Goldman Sachs. 1 out of every 6 companies in the S&P 500 currently has an activist invested. Some are active, others are just kind of lurking there. Campaign levels are about 8% higher than the average over the last 4 years. But things could start to ramp up. Between December and February, more than 3/4 of U.S. public companies opened their nominating windows for dissidents to put forth directors. The environment appears to be conducive with a more optimistic macro outlook, lower volatility, high corporate cash hoards, and reasonable leverage levels. Goldman's global head of activism defense, Avi Mehrotra, tells me, quote, these conditions provide fertile ground for activists to create the foundations to launch their campaigns. And activists are feeling emboldened after having returned nearly 8% in November alone, the best performing hedge fund sub-strategy among the 28 published by HFR. As for what to expect in 2024, I'm told there will be more big cap fights, more activity globally, particularly in Europe and Japan, and more pressure on companies to do mergers and divestitures, Scott. So maybe we're already seeing some of this kind of under the radar M&A activity percolating under the surface.
What impact, if any, do you think the run in the market has had as we make the turn into the new year? And let's just, for argument's sake, say that we have another strong start. Is that better or worse?
It's definitely better, because if you're an activist, at the end of the day, you want to show those 8% returns. You don't want to, you could win a proxy fight, and if you have negative returns, your LPs aren't going to be very happy. Also, if you're going to go public with a position, you want to make sure it's going to go up from there. You don't want to be kind of calling for all sorts of things and then having the economy go into a recession. So that's kind of why activism was muted, at least in the first half of the year, because activists didn't want to be on the record and then being kind of that last big call before the economy fell off a cliff. Since that didn't happen, the market garnering some steam, all of those are ripe conditions for more activity.
Okay, the All-Stars are out in full force, too. Nelson Peltz among them with Disney, Jimmy, which you own. That's probably the most high-profile one that we need to keep our eye on. By the way, that stock gets reiterated a buy today at Bank of America. Your commentary, though, to the producers today I find interesting. Stocks are up, breadth is expanding. I don't see opportunities for them being activists, yet you were making the case quite loudly that you were supportive of Mr. Peltz in the stock that you want to see go up.
Yeah, I hope I phrased it properly, which is to say this. When I woke up on that day that he announced he's doing a proxy fight, I didn't wake up saying, boy, I hope Norman Peltz does this. Having said Nelson Peltz, sorry. Having said that, once he announced that, my feeling is there's only upside. I mean, it can't hurt. There's only upside to a couple of his nominees being on the board. So that's the point that I was trying to make. And I do still support Mr. Peltz in that endeavor.
It's interesting to hear from a shareholder think that the presence of an activist means there's only upside in the stock, which emboldens them to have more campaigns.
Yeah, I think it depends on the stock, of course, and it depends on the activist specifically, because sometimes if you're a management team, you would see the presence of an activist as being a distraction, which can be an issue if you're looking to do a certain strategy and then all of a sudden you have to deal with a proxy fight, and that's costly. So
activists have a longer time frame, though, than portfolio managers. If you know what I mean? Like, because we're mark to market every single day. They have patience to see it play out, which is what Peltz is going to do, because it's going to take a long time for Disney to see a turnaround, because they've got a lot of issues.